what we have seen happening in the last couple of months has questioned the safety of the long bond in the United States in a way that I don't believe we've seen before.
Okay.
And we can see some, in our data, we can start to see some new trends, which I think is separate from global growth, separate from what the Fed is doing. And really what's happening is that after essentially a 10-year bull run for the dollar, right, and people being loaded with U.S. equities, loaded with U.S. fixed income, international investors are scaling back. It doesn't mean that they are abandoning the dollar, doesn't want to have any exposure, but I think it is a structural theme that they want to get exposure reduced. And this is new, right? Because people were extremely comfortable with the dollar being the dominant currency, and it has many elements. So obviously the tariff situation has shocked people. And who has it shocked the most? People always say, oh, it's China selling treasuries. I don't think that's the key thing. The key thing is that the closest allies of the United States have been shocked by what's happening with tariffs.
Canadians
And Europeans.
UK, Europe.
And by the way, the Canadians and the Europeans hold way more bonds than China does.
That's right.
Way more, right? So they're much more important. China hasn't really been buying any U.S. bonds since 2014, the crisis we spoke about earlier.
Yeah.